Hello, this is After the Close podcast via the Critical Point podcast show. This is Rich Pawson. Thought you'd like a little after the close update on the S&P 500 stock index futures that are a proxy to the cash, if not the entire U.S. stock market. It is 3:35 p.m. Central Time. It is May 20th. So let's take a look. This is a weekly chart of the S&P 500 mini futures. And I want to first say, for those of you that are new subscribers or you're just looking at our free stuff and contemplating a 2-week free trial, there are 12 major groups of market participants that create nearly 100% of all the price fluctuation during a year. And what the model does is discover those, track them, learn their behavior, and start to forecast when they are going to change their positions. We then use this as a blend to dovetail to long-term business cycles, so it can also become a long-term forecasting tool, a risk management tool, as well as just a trend-following tool. So at any rate, what we have is the level one is the largest player, or I should say the more aggressive and of the greatest influence on the market during the year, going to move price the most. The level one trader started buying in March, and as it turned out, it was the earliest via the model for a bottom. So the model was on top of it, but it was early. I actually bought March 25th for a long-term position that I still hold, and I'm going to try to hold for the next 10 years. I also bought positions to trade these level one, level twos, and I've stepped in and out of those at times. So at any rate, let's take a look at what's going on. We had a level two rally, which is the second most important type of trader that's creating moves throughout the year. And the forecast had been that the level two trend would turn down. Well, as it turned out, it turned to be choppy range, and last week was the best effort yet of actually turning that trend down and having a correction. And it failed. And so earlier this week, the model said, it's getting too late. We can still see a pullback for level two in the next few weeks, but it's likely the level two trader has given up on taking profits or even betting on a downside and has returned to buying, and therefore is supporting the largest or more aggressive, most aggressive type trader, the level one. And so this is our level one trend. In other words, these types of traders have just been buying all along. They hesitated here along with the level two with hopes of buying a dip. They didn't necessarily sell. Whereas the level two trader probably actually took some profits, and some of them may have even bet on the downside and are now trying to verse and get caught up. Bottom line is the forecast is that level one trend is up into probably mid-June on into early July, and that the level two trader is returned, and so the level two trend is up as well. They're thinking the same thing, setting the same goals. That doesn't mean they're actually thinking in terms of time. That's what I like with this model. I think it's rather unique, and it's certainly original. I think they're just looking at fundamentals and making a forecast for fundamentals, news cycles. They're making their technical forecasts, and they're probably just thinking in terms of prices and don't really know how long it's going to take. They also allocate money, and they'll buy all the way up until they basically have run out of money. So that's another feature of this modeling, is it gives us a clue when they got to stop buying, either because of analysis or because of risk management, or they have peaked out on their asset allocation, meaning it's all going to add up to losing demand. If you lose demand, only takes a few sellers to knock down a multi-trillion-dollar market, believe it or not. Okay, so at any rate, it looks bullish. I like the action this week. I'm totally back in for level two, level one trends. I've been long-term since March 25th. I hope not to touch that long-term position for another 10 years or so, but we'll see. Maybe it comes all the way down and I have to start over. Right at the moment, I'm going to set on it, okay? So at any rate, we do have the technical side that is somewhat overbought right now. It was overbought, turned to a sell signal. Now this week it's trying to turn a buy signal, but we won't know for sure until we see the close of the week. My guess, if it wants to turn to a buy signal, that will be supportive of this model analysis, and that all the market did was back off some of the overbought so they can just take it higher and get it more overbought and yet again. So bottom line is, until we see trade below this week's low, which is currently 28.50 for the June futures, and I'm guessing that means 28.60 on the cash right now, but you want to check that yourself. If we see it take out that low, it may only be one of those level three trends, and the market's just going to go on up to level 1 only. But it would be a warning to try to reevaluate, and the violation of last week's low at 2760.25 would be a signal something's gone wrong and it's coming down in that level too low. It could still be a buy, however, so it's really more of a signal of just reevaluate. For the moment, I'm bullish, the model's bullish, and I got to give it a chance, and I won't bother with the daily chart here, but basically watch the 200-day average on this June S&P 500 futures. I think the market wants to get through it. It's been hesitating. It's bumping its head against it. Maybe they'll get discouraged and turn to selling, but I think the psychology is flipping where they're saying, you know what, there's not enough sellers near that 200-day average. It's really the buyer has been a little bit nervous. Pretty soon the buyer's going to wake up. They want to buy more. There's no sellers. I say they pop it through that 200-day average. They may blast it. So, I think it's going above 3,000 in the S&P. So hopefully this has been helpful and some update, especially for those of you on the premium service. And consider the premium service because we're giving updates throughout the week on the stock market. And then we have less frequently some updates on a variety of commodities and less frequently interest rates, dollar, and the economy. Thank you. And as always, manage your risk, relative analysis of others and your own. This has been your After the Close update.